Welcome to Straddle Income. Today is Thursday, July 30th. Today is the biggest day in terms of earnings, and now you have all the FANG companies reporting earnings today. So we'll start off by talking about some of the trades I made today, and then we'll look at the earnings, and then last but not least, we'll talk about some of the things you can pay attention to tomorrow. Tomorrow is going to be important because it's the end of the expiration for a lot of the weekly calls and the puts on contracts. So there's potentially going to be some opportunity if we get up early in the morning, you can maybe catch a run towards the end of the day. So with that being out of the way, let's talk about today's trade. Today I actually made a couple of trades. So we'll start talking about some of the trades that I did in terms of the selling the puts and the calls. So first of all, I closed my trade on Nile. Earlier, a couple of weeks ago, I bought a Nile trade about, I sold a put at the price of the $10, and at the time it was $170. Now, today I actually closed it up. I closed it and paid the $12 back. So I made a profit of $150. Then right after that, I made another trade for Nile as well at the price of $12. So basically, the concept is when you're selling a put on any of the underlying stocks or ETFs, for example, in this case, the Nile, I was selling the put for $12. Basically, what the idea is two things. One, like I mentioned in the video a couple of days before, if you're the long-term believer of the company, you don't mind holding the company, the shares, you can actually using selling the put strategy to get the company's shares at a discounted value. So in this case, if it's $12 and I'm ended up being assigned and I have to, I'll get 100 shares of the Nile at the price of $12 minus 151. So the concept is that if it drops below $12, then the put I'm selling basically indicated I have the obligation to buy 100 shares of the Nile. So in that case, I'll get a price of $12 minus 151. So that's one of the rationale on selling the put. The other rationale is basically you're expecting the underlying stocks or ETFs will stay above $12. So in either cases, I'm willing to take 100 shares of Nile, or if it ends up above $12, I'm fine with that too. So that's really where the mentality is. So I sold a put at $12 at the price of $151, expiring August 28th. So that's the first trade I did. Well, actually, it's the last trade I did. So we're going reverse. The other one is the FAST. FAST is we're going to report earnings. FAST is one of the grossing, one of the highlighted stocks. It was really enjoying a good run up for the last couple of weeks, but then it kind of slowed down a little bit. So today I was looking at the FAST option chain. So if we can, take a look at all the option chain here, basically it is in a very volatile state. It's 64% of the IB percentile, meaning it is 64% higher than the past year in terms of volatility. And if we look at each individual volatility for the option chains, we're talking about 158% all the way to 110%. So I sold a fastly, put contract at the 132%. When this price is high, meaning you can sell the contract with a higher premium. So what I did, basically, I sold a $75 put contract, and I protected myself by buying a $65 put contract. Again, the rationale behind it is the stock would be, ideally above $75, so I can take whatever the premium that I'm getting when it expires. So the premium we're talking about here is $170. Again, this is about selling a put spread that are expiring in August 14th. Then let's look at some other stocks that I made earlier. So I'll save the UPS to the last. I'll talk about the KO. Coca-Cola actually had a nice, some kind of rumor toward the middle of the day, and it really increased the price of the Coca-Cola stock. It was a huge spike. So when the news first came out, I bought a couple calls at the Coca-Cola. I think at the time was, I bought a weekly call because weekly call expiring tomorrow are cheap at the time. So I bought about 15 contract, I bought a 10 contract at price of $15. Then once it goes above to $15, I think around $20, I started to sell some of the contracts back. Just be cautious here because this is really a day trade. And for day trade, you need to meet certain day trading requirements. So by selling the 5 contracts back at $20 each, I was able to capture about 75% of my initial investment. So I left the remaining contract to expiration. And, that's actually one of the good strategies because as you can tell, now the contract has really, the value has gone down because the stock dropped. So, I'm essentially losing, from $15 minus $2, I'm talking about, $12 loss here for each of the contracts. And 5 contracts, and that's the equivalent of $62.50. So that's always a good strategy, buying a lot of, the contract at a cheaper value than, making sure you can get the initial investment back, your principal back, so that when, even if the trade is going south, you're still okay because you're protecting yourself for the initial investment. All right, last but not least, let's talk about UPS. UPS is actually a huge win today. We're talking about, for some of you guys have not watched the video yesterday and the day before, I was really hoping the UPS would have come back in a strong performance. And luckily it happened. Well, I shouldn't say luckily because there's rationale behind it. So basically what I did, UPS at the time when FedEx was reporting earnings, let's look at the FedEx report. I think it's DX. FedEx, when it reported earnings about a couple of weeks ago, I think around July 1st, it really popped. And when I see it pop like this, the rationale is I'm going to also buy some contracts for UPS, which reports earnings later, much later than FedEx. Just because the fact that there's pandemic and everybody's working from home and everyone's is buying online, the fact that all the shipping carrier is going to have a huge revenue. So, they reported earnings today early before the market opens. And then, we're talking about a jump from 136 to 145. So the contract I purchased for UPS, I bought about 5 contracts for UPS at the price of 29 cents each, July 1st. So when the stock popped today, a lot of my calls, I've been trying to collect my premium back along the way, but in the morning I have about 2 contracts left. I have 3 contracts left. And then, as you can see, my initial investment is $29. Now we're talking about $445. So this is really the power of option trading. You can really bet on, with a small investment and then getting huge profit. But again, the chances of hitting those kind of trades is low. That's why those trades are called a lottery ticket. So be very careful when you trade those things. You can lose all the initial investment. So again, this is not a recommendation. It's just educational purposes. So let's look at the trade for UPS. So the trade UPS, as you saw earlier, that I was buying the contract at $29. And this morning when it actually popped at $8.45, I sold it back the first contract at $660. Then later on towards the day, UPS is slowing down. So I sold another contract at $500 each. So in total, I'm collecting about $1,100, from the $50 investment that I initially had. Okay, so again, this is just illustration purposes. Lottery tickets are very, very risky. So play at your own risk. You can lose all the money if you don't know what you're doing. Now, let's look at some of the earnings. All the FAANG companies reported earnings. I think Apple was one of the bigger surprise compared to Amazon and Facebook. Apple stock actually really surprised everyone here. And the fact they announced a stock split is even more crazier. So when they reported, 300, before they were reporting, it was 384. Now we're talking about 409. So I did an iron condor yesterday on Apple. So for some of you guys that are not familiar with iron condor, let me just go over that again. The iron condor is basically a range-bound, neutral strategies. So you don't expect the stock to be too bearish or bullish. So I sold a iron condor yesterday at the, with the fact that it will lock, range bound is between $390 to $362. And then the fact that, Apple has such a surprise today, I will be monitoring closely in the morning and then see if there's a way I can manage it. So when you sell iron condor, this is the thing that you want to be very careful of. Iron condor is a very powerful strategy. Usually, you can get around it with a lot of the earnings because earnings actually, it had an initial ramp up, and then people, when actually earning reports, in most cases, about 75% of the cases, earning for the earning place, they will stay within, the opening price of the week. But in the Apple case, it has a huge surprise, which is a good thing for the company and for myself. I have a lot of Apple shares. So this is really, the play that I want to take advantage for the earnings. So I sold the iron condor on earnings. So I will monitor closely tomorrow morning and see how I can manage it going forward. Here's all the stuff I want to talk about today. And tomorrow is going to be Friday. It's going to be the end of the July, and it's going to be crazy because, this is really the time when a lot of the federal/state assistance program are going to expire. So it started about, 1,500 and then kind of dropped it. Now it's kind of flat here. This is a very typical case for earnings play. That's why when you have a neutral strategy like iron condor, straddles, strangles, this is where you can make the most money out of it. So without being out of the way, again, appreciate your time here. I hope this is interesting. This is helpful for you. So be very careful when you trade a lottery ticket. Again, I have to emphasize, the chance of you hitting those are very small, but when you actually hit, it's very satisfying. So play at your own risk, and tomorrow is Friday, and happy Friday. I hope to see you tomorrow.